Your chart setup is the foundation of every trade. The more you have on your charts, the less likely you are to make educated decisions. In this episode, I'm going to walk through the exact TradingView layout I use for every session. From scratch, everything you need. You will be surprised how simple this setup is and how effective you will be with it. Time frame selection. I use 4 time frames. Each one has a specific job. The 1 hour is for drawing my parallel channels. The 1 hour gives me the big picture of structure, where the trend is, what the channel looks like, where the discount and premium sit. The second is identifying the expansive leg of a potential dark night setup. The 1 hour gives me the full context of the move. So here we go. Here's a 1 hour chart right now. Oh, sorry, that's a daily. Here is the 1 hour, right? So let's have a look at this. So right here we have an area where we've got a high, we've got lower highs, we have lower lows, boom, boom, and you can see our channel aligns perfectly with that. Now, what I'll do with this is I'll outline this trend, right? There's another smaller trend here in the upwards direction. There we go. I use this to identify my bias on the 1 hour. The 1 hour time frame is obviously a higher time frame to an entry time frame, but what it does is it frames your positions for larger moves. So for instance, if this was a 5-minute chart, these moves would only be maybe 20, 30 points. But on the 1 hour, from discount to premium, they're 402. So if you get your entry model down here on the discount on a high time frame, then you know that the distance between the discount and the premium is substantial, and that's a big move. That was a trade over 7 hours. Also for parallel channels, once the 1 hour confirms the overall trend, I drop down to the 15-minute to refine my channels. It's a tighter ABC point, more precise boundaries. So here we go. Let's have a look for the 15-minute. So for instance, within this 1 hour channel, let's just label that. Right? Within this 1 hour channel, we have a number of 15-minute channels. So highs through, right? That's a 15-minute channel. So again, from discount to premium, and again. So the 15-minute is really good because if I happen to miss getting in up here on the discount of this particular 1 hour channel, I have several different opportunities to get in on this trade still on the 15-minute chart, right? I got 2 more entries. So there's 3 times that I could have got in there, and every single one of those moves. So if I got in at the top, say, let's just say here, and I'm trading down to the premium, that is 1,295 points. All right. If I got in on the second one right here, that is 1,067 points. And the third one, much further down, that's still 782 points. 5-minute, that's the entry time frame. This is where I confirm break of structure and fair value gap trigger. When price breaks structure and leaves a fair value gap on the 5-minute, that's our entry position. So you can see here, we're coming off the top of this 15-minute fair value gap. We've got structure through the bottom here. We pull down through that, creating a new fair value gap. That is a break of structure right there. We come down, we recycle back up, hit the discount of that 15-minute channel. We set our entry in that fair value gap. Our stop goes above the candle that created the fair value gap, and we target the premium. That's a 1 to 19.6 risk to reward ratio, meaning I would risk 1% of my account to return 19.6%. This is the essence of what we do in this course. Low risk, high reward trading. 3-minute time frame, also an entry time frame. I use the 3-minute alongside the 5-minute to confirm entry models like inverted fair value gap or the break of structure fair value gap model. The 3-minute gives me tighter precision on the retest, especially useful when the 5-minute FVG is a little bit too wide. Let's have a look at this. So we have a fair value gap there, which gets inverted here, right? That is an entry as well. Stop entry at the bottom of the inversion, stop at the high, and we're targeting the premium of the channel. This is a mega trade because this is right at the top as well, right? Let's do it there. There we go. So this is the 15-minute channel coming through here. Right, that's the 15-minute channel going through there. That is a 1 to 32.06. Another classic example of low risk, high reward trading. Right, and then that is the inverted fair value gap. Now, we also have a break of structure right here, okay? We've got the break of structure right here. So you can see price comes down, bounces off, puts in a low, we draw our line across, price then pulls through that area, creating a new fair value gap. This is on the 3-minute. Right, price comes in, tests in that area. Our position entry is at the 50% line. Our stop goes at the top of this candle that created that fair value gap. And our target is, again, we're trading from discount into premium. There we go. Again, that's another 1 to 22.94. 1% risk for a 22.94% return. This workflow is always top down. 1 hour sets the direction and spots the setup. 15-minute refines that channel. 5-minute or 3-minute executes the entry to perfection. We're going to go into this real deep later in the course. By default, TradingView adds indicators. Remove them all. You don't need them. You don't need the volume. You don't need nothing. No RSI, no MACD, no moving averages, nothing. Price action gives you all the information. Everything else is a lagging indicator telling you what already happened. The strategies in this course are forward thinking. We read structure and anticipate moves based on what the market is building. Nice clean charts, nothing on them whatsoever other than one indicator. I'm going to show you that right now. If we go to indicators up the top here, we go to indicators, click that. We want to type in ICT, kill zones, and pivot points. Right? And we're looking for this one, ICT, kill zones, and pivot points by TFO. Now, you want to go ahead and put that in your favorites, okay? Then we click this, we add this to our chart, and boom. This does all the work for you. So ordinarily, before this indicator was created, I would have to go through and draw out Asian high, Asian low, London high, London low, all of it, right? Now with this indicator, I can go through, I can just put it on and I can see visually, okay, we've just swept Asian lows, we're going to Asian highs, right? Again, London comes up, sweeps the highs, comes down, sweeps the lows. It does all the work for you. It allows you to have more than just the sessions as well. Whoops, turned it off. There we go. So have a look on my screen. This is my current settings. I got the session drawing limit for 300. That means if I backtest, there's 300 sessions going back that this indicator will be part of, right? If you have it at 3, it's only like 3 days back. My maximum time limit is 1 hour. Anything over 1 hour, the indicator looks really messy. You can't get the session kill zones on there. It's just too much. Of course, the time zone is American. Label size is normal. Text color, that is whatever you choose it to be. Click it, opens up with a full color chart, and you can change that. Drawing cutoff time, 6 p.m. to 6:01. All right, then I've got the kill zones down here. So I can turn the boxes on or off. As you can see, they've gone, and just have the lines, or I can have the boxes there as well. I have Asia, London, and New York AM selected. I do have New York PM there as well. I don't tick the lunch. Again, these are already predetermined. Click into the box, change them to whatever color that suits you. I have the box transparency to 80 and the text transparency to 80. Down here in kill zone pivots, I've got show pivots, alert broken pivots, stop once mitigated. So that means when price goes through a level, it'll stop that line from continuing on. I've got show pivot point labels, and I've got everything showing to the right side. I can flick that off and everything will go to the left, right? You see that, New York? Right, it flips side. So I've got extended pivots until mitigated. From which sessions, most recent. That is about it. This is where you can choose your line if you want dash, dotted, or solid. I have my line strength on 1. Again, the midpoint style is dotted for me. Further down, the kill zone range. Show kill zone range. Show average. The average length is 5, all right? So that means the average length up here on the top right, this shows the average point count from the previous 5 sessions. I've got table position top right, which is this guy. You can switch it around. We have it wherever you want. Excuse me. Table size is normal. You can have it like tiny, small, or auto, or you can have it as huge. There we go, that is huge. I just have it to normal. Here we go, day, week, and month. I've got high, low, high, low, high, low. They're all in, and the color there is this pinkish color. I have that as a dotted line, and again, the line width is set to 1. I've got days of the week label at the bottom and midnight. Hide weekend labels. I'm not interested in anything that happens on the weekend. And then I've got opening prices, unlimited. I have the 8 a.m., I have the midnight, and I have the 10 a.m. And again, you can just click on the side here and you can change whichever color you feel suits you best. I have mine as this pinkish color. You can have true day open if you like. You got some timestamps down here, and that's about it. All right, everything else is default. Okay, that is all you need. All right, this takes care of liquidity sweeps. For dark nights, I just toggle it off. Right, I toggle it off. I go to the 1 hour. I look for my expansion. There we go. Here's an inverse model right on cue. I look for my expansion. I wait for the accumulation, and then I look for my entry to come back and equalize that part. As I said earlier in this video, I will be going into much greater depth with this as the course goes on. I'll go into these strategies in full, entry models, everything. But this is just a little a chart setup, and I just want you to be on the same page as me as we move forward throughout this course. Volume. I only use volume for one thing. I use it to plot low volume areas. When these low volume areas match up with fair value gaps at a key level, it indicates a potential reversal point, a pretty damn strong one at that. All right, so let's have a look at this. Let's go in here again. Let's go up to indicators, click that. We want visible range volume profile, right? Again, you want to make that a favorite, and you want to click that, and that will toggle this volume profile onto your screen. Now we're going to go up here to go to the settings of that. We'll click. Right, so I'm immediately going to change 2 things, right? I'm going to immediately put this to 68%. Okay, 68%, and I want my row size to be 300. Row layout is number of rows, and volume is up, down. Okay, we'll go over here, volume profile, toggle that on. The width of the volume profile, as you can see right now, that's coming out of my screen substantially. I want to click that down to about 15. Okay, I want the placement of this volume profile to the right. Here we can change all of your color scheme. I've got mine up volume on as gray and down volume as pink to match the candles on my chart. I've got value area up as gray, which matches the gray above here, and the value area down pink that matches the pink down here. Okay, and then I've got labels on price scale, values in status volume, and inputs in status line checked. Everything else, apart from that, those two settings, which are the value area volume is 68%, and the width of the box is 15%. Everything else is default. Now, I'll go down to a 5-minute chart here. Okay, so the only thing that I use the volume profile for is the low value nodes, and I'll show you why. Because once you combine a low value node with a fair value gap, it becomes a very, very powerful fair value gap. So just right here on my screen, we have candle 1, 2, and 3. Candle 1's wick comes up here. Candle 2 expands. Candle 3 does not close the gap between the two wicks. That presents a fair value gap. So let's draw that out. Right? And then when we look left over here, this is what we want to see, right? So we have a high value node here that is of no interest. That means that price is very balanced around there. And if we look left, look what's happening. Price is balancing, it's balancing all the way through there. So that's just accumulating, and accumulating, right? But when we come down to these areas, this is what we're looking for, right? This is a low value node. Where price comes out and it comes back in, that is a low value node. When price comes back out and comes back in, that is also a low value node. And if we keep going down, there's low value node there, there's one there, there's a bunch there, and there's a bunch there, all right? But where this particular fair value gap lies, there is a low value node right here. So let's just draw a line from the fair value gap into that low value node. And what you'll see on my screen is price creates that fair value gap, goes up, recycles back down, and look where it reverses from, right? It reverses right on that low value node and then goes to the upside. Now that's what makes fair value gaps so powerful, because if it doesn't have a low value node in it, then it's probably not going to hold, right? It's probably not one that's going to be revisited. So you can literally now cherry pick which fair value gaps you are looking to use and which ones you want to discard just by using LVNs or low volume nodes. Save this layout. Name it something simple, NQ Trading or the Trader Richie setup. Every time you open TradingView, load this layout and you are ready. Now you have the exact chart configuration I use for every session. Episode 4 is where we start using it. Parallel channels and how to read market structure. I'll see you then. Ciao.